Nvidia just reported earnings and the stock is up nearly 5% after hours. Now, in today's episode, what I want to do is take a closer look at some of the earnings numbers that I think are crucial for all Nvidia investors. But more importantly, we also do have some other updates impacting the overall industry after hours. So I want to share my overall thoughts on everything that's happening and how it might impact my overall portfolio tomorrow. So let's take a closer look in today's episode. All right, so first, like I mentioned, Nvidia is up nearly 5%. Let me just say on the top line, the company did really well, right? There wasn't, in my opinion, anything that really shocked or surprised me in forms of numbers. And as we are going to see, maybe guidance was a little bit weaker than what I expected for fiscal quarter. And here we can see guidance for the next quarter is about $45 billion. Now, the reason I could care less about a weak guidance is because I do believe the long-term tailwinds for Nvidia are still pretty much intact. And I want to make sure I talk about that a lot right now. And the intro is right now, things might be a little bit iffy with the Chinese space, and that's creating some headwinds for the stock and to me, that's more short-term pain, at least for now. The long-term tailwind is still pretty healthy. So there was nothing out of this earnings call that made me question if I should have only 25, if I should start to sell some of my Nvidia positions. Nothing came out in there that made me worried about my massive position in this AI company. So I want to start off with that. Now, we're going to look at some numbers, and we're going to look here at finchat.io. Remember to check out my special offer at finchat.io/Jose for 15% off. The link is down below. But the great thing about this platform is there are some kind of metrics that are already available for charting. And these, in my opinion, are going to be the three metrics I want to showcase right now after earnings that I think every Nvidia investor should know. First, we do have the green. I'm going to guess most of you know what the green is, but the data center. Then we have the blue. The blue is a little bit harder to see, but the blue Chinese revenue for Nvidia. And then we have the orange. The orange is a free cash flow for Nvidia. And let's start off with the data center. So data center revenue hit $39 billion, up about $4 billion sequentially. Now, they do mention that for the upcoming quarter, they do expect this to continue to grow. And that's why they're guiding kind of that $45 billion. So to me, Nvidia is going to hit data center revenue $40 billion pretty quickly, and there's massive long-term tailwinds in this industry from sovereign AI, big capex, individual AI companies, massive Stargate projects, and the list goes on and on. So this quarter, we saw that healthy demand growth. Now, what I want to kind of talk about is, and we're going to look at transcripts in a bit for the company, but the Chinese market was actually down sequentially. And the main reason is the company did have to stop sending some chips to China due to export restrictions, and that pretty much halted their revenue stream from the Chinese players. And it was down, they said they missed about $2.5 billion in revenue with this export restriction. So if this export restriction was never put in place for the H20, remember, we do have kind of an export restriction on the higher end chips like the H100 and the Blackwell, but this was for the weaker down chips. If that weaker chip was never restricted, this company would have destroyed this earnings and would have destroyed guidance like no tomorrow. So to me, that is actually now a tailwind. I do believe at least the weaker down chips, maybe not the H20, but the Blackwell variant will be used as a trade tactic by the current US administration. And if that is the case, then there is the optionality for at least the B20, B40 variants of this chip to provide some massive revenue growth. If we ever do see a turnaround of at least the weaker down chips are being able to send to China again, I think that would rally the stock dramatically. Now, the other thing is that free cash flow. Free cash flow this quarter was $20 billion. This company is building cash like no tomorrow, and it has amazing margins. Almost 50% margins on free cash flow is extremely ridiculous. All right, so next I want to take a closer look at the transcript here, and we're still here in finchat.io. And I've highlighted a few points that I think investors should know. And I think these are crucial for more the short term. There are going to be some long-term win potentials, and especially tailwind potentials that you're going to want to hear. But they discuss how they were unable to ship about $2.5 billion in H20, and that obviously impacted their overall market because they believe the Chinese market is about a $50 billion total addressable market for them. Now, they also kind of gave us that they are evaluating their limited options to supply the Chinese market. So there are at least some talks happening with the company, within the company, of a way to just kind of serve the Chinese market while meeting the new restrictions. So if they do announce a new AI chip for the Chinese market, I do believe that could be a nice tailwind for the overall revenue growth. Some other things we did see is the Blackwell platform, which is their new architecture, now contributes to nearly 70% of data center compute revenue as they are transitioning from Hopper. So we can see Blackwell ramping up pretty strongly, and eventually is going to become a very closer to 90, almost closer to 100% of total revenue as the Blackwell platform destroys the Hopper. And the real competition to Nvidia is Nvidia itself. Now, they also talked about kind of the NVL72 system, which kind of has had a bit of a rough start and had a lot of rumors of that start and those yields being really low still. But the company did mention that major hyperscales are each deploying nearly 1,000 NVL72 racks. That's 72,000 Blackwell GPUs or so. The Blackwell demand is insane, dramatically insane. And these are some massive numbers coming out here for the NVL72. Now, some other great news, and maybe I lied, maybe there are some things that actually made me go wow and got me excited. First was that NVL72 system, but next they did mention that the GB300, which is the Grace Blackwell Ultra, or the Blackwell Ultra, is already sampling earlier this month to major cloud service providers. And because it's not a massive architecture shift, that is going to be very easy to proceed with the volume production of this product, and they expect production shipments to start later this quarter. That's going to be the end of Q2. So a lot of analysts were expecting maybe Q3. Q2 is super exciting. I do believe this is going to be a massive tailwind because the GB300 is seeing massive demand from the channels that I'm reading. Now, another kind of bullish sentiment is they mentioned the pace and scale of AI factory deployments are accelerating. Remember, AI factories are a special type of data centers that are pretty much just focused for the AI space. With nearly 100 NVIDIA-powered AI factories in flight this quarter, a twofold increase year over year, with the average number of GPUs powering each factory also doubling in the same period. So that's a lot more revenue for NVIDIA in forms of GPUs and in forms of AI factories potential. Now, they even have a line of sight of projects requiring tens of gigawatts of NVIDIA AI infrastructure in the not too distant future. Remember, NVIDIA mentioned that for each gigawatt, they can get about $40 billion or so of revenue. Here they're seeing about a 10 gigawatt project. That's about $400 billion of NVIDIA revenue potentially. So massive growth opportunity. And this is why I said that I'm not worried about the long-term potential. In forms of their overall networking solution, they also mentioned that the Spectrum X posted strong sequential year-over-year growth and is now annualizing at $8 billion. They are seeing adoption by massive cloud service providers. Two that they added this quarter were Google Cloud and Meta platforms. So that was really exciting to see about their networking side. Now, obviously, they talk a lot about the Chinese market. Unfortunately, it's a massive loss for them. But again, I do believe with the current administration, at least the H20 or the Blackwell variant of it is going to be used as a trading tactic. So if that market ever opens up, and I think it will for NVIDIA, it could be very bullish for the stock price. Now, they did talk about the Singapore revenue. Too long, don't read. The Singapore revenue is not a bearish thesis. Singapore, roughly 99% of the orders there were US-based customers that used that place due to kind of the incentives and a lot of the credits and tax incentives that they get for being a Singapore entity. So their companies, it's not like it's too much exporting or leaving that avenue. We can see that most of those 99% are actually built to US-based customers, which should end the overall bearish thesis of NVIDIA and Singapore. Now, the company, excluding the one-time hit that they had to write off in inventory, gross margins were 71.3%. pretty much in line what we were expecting. So gross margins aren't really taking a hit. Now, for the second quarter, this company lost about $8 billion in revenue. Again, remember, with $45 billion of guidance that they gave, that would have been about a $53 billion quarter. That would have been insane for Nvidia. And again, it sucks, but even with the Chinese market, this company is still expected to grow by a few billion sequentially, which I think is wild. Now, I don't have much more here for Nvidia in forms of the press release that I think investors should know. The only other thing that I think that's coming to mind is Jensen next week is going to be doing kind of a Europe show or Europe kind of trade show. So I do believe we are going to see a nice amount of announcements of various AI factories coming out from the Europe market. And that's a lot and a lot of tailwinds, as obviously those are going to be powered by Nvidia GPUs. Now, that's all I have for Nvidia. I want to take a closer look at some recent news impacting the market right now. We do see that the Dow futures jump on news right now that are coming out of the court blocks Trump's tariffs. And obviously, tariffs were creating some major pressure in forms of at least future potential growth in stocks because of the worry of macroeconomics and how it can impact the overall global financial world. So kind of eliminating that is creating a nice futures bullish sentiment for the market right now. I mean, AMD is up about 2% after hours. Apple is up nearly 3.5% after hours, as we do know that this one can benefit dramatically with no tariffs. But to me, I think this just opens up more uncertainties. I'm pretty sure the administration is going to find a way to kind of fight this. And then the uncertainty continues and the volatility continues. So I would say be careful with this green. I'm obviously pretty excited for the green, but for some reason, I think it's going to be somewhat short-lived or very choppy. Now, the other thing that I wanted to talk about before leaving the episode is there are reports that Trump has ordered the halt of China sales for chip software stocks. So for those that are not familiar, there are software solutions that help with the design process of chips and semiconductors. The two main players in this space are Synopsys and Cadence. Both were down about 10%. Actually, this is not Cadence, that's Intel. Cadence both were down about 10% after hours. Now, I mean, I do believe rightfully so that these companies were down for it. There is the loss of a market. And it's not like the AI space where that growth can be going somewhere else instead. So I understand why stock prices are down, but regardless, I think the long-term thesis for both these players are still pretty much intact. So both the stocks took about a 10% hit, but are up after hours due to that bullish sentiment of kind of the tariffs court ruling. But that doesn't change much about the export restrictions for their software. So that is still there. So wondering why these stocks are rallying, though, a nice amount. So interesting. I don't own any of these at the moment, but they are starting to look at very attractive levels in my opinion. So I hope you guys enjoyed today's episode. Take care. And if you can, make sure to hit the thumbs up and the subscribe button. I'm trying to hit 75,000 subs by the end of the year. Peace out.